Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 18th of February 2020, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, so now then, before we of course jump into the charts, as always, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which if you click here on the top, it'll take you to this page which we update on a daily basis. We throw out our daily analysis, just technical analysis on its own, yep, I believe you can find a lot of useful information here for yourself. So feel free to visit us on jfdbank.com and yep, click on the research page right there. Now then, let's jump into a few interesting setups. Now again, the first one I want to touch on here is Nikkei. Now I haven't looked at this one for quite a while, but basically what's happening here is that Nikkei is moving in a somewhat of a range here. So basically after it had a nice acceleration here to the upside, after this nice push here which we saw in the end of August, now Nikkei is seen just moving kind of a little bit sideways. Today it's kind of on a slide as well, so, and the sideways activity is kind of maintained here roughly between the 22,705 territory and the 24,091 zone. So we're actually even a little bit higher here. Let me just quickly adjust this level. There we go. And that's roughly around excuse me guys, and that's roughly around this area right here on the top, so near the 24,116 zone. So in other words, for now, on a bigger picture here, we can see that Nikkei is just moving sideways, but for now, and from the short-term perspective, it is kind of drifting a little bit lower. It's currently just balancing slightly above its 200 EMA here on the 4-hour chart, but in a way, if this decline continues there, we could easily see a retest of this 22,705 territory, or initially we'll aim for the low of the 3rd of February, or in other words, the lowest point, the current lowest point of February, near the 22,776 zone, so roughly around there. Now again guys, for now we may see a bit of declines here, but overall we're still neutral, because we're still seeing this index is trapped in this this wide range. So that's what we're going to be keeping a close eye on. Of course, from the more of a medium-term perspective, if we do get a breakthrough one of these levels, through one of these sides, then the sides of the range, of course, then yes, we will aim for further directional moves. So let me just quickly mark this for our future reference. And but from the short-term perspective, there is a good likelihood we may see this one drifting further south towards the lower bound of this range, and then we'll take it from there, guys. For now, like I said, it's an interesting one, but at the same time, be very careful. You can see that the index is currently getting a hold up near this little zone, near the 20 23,148 area, which previously here in the beginning of January acted as a good area of support. So now this is where the index kind of is resting. In terms of the upside inside the range, what we could look at here is if we get a push above the 23,555 zone, roughly around here, then this would also place the price above all of its EMAs, and I mean the 21 and the 100 EMA here, and then yes, we could start targeting the initially the highest point of February, the current highest point of February, near the 23,995. But then, yep, slightly above that, we do have that 24,116, which is the highest point of January. So again, guys, for now, we are leaning more towards the downside. Of course, we'll be very careful because we can see that the index found support near this area here, near the low of 6th of January, near the 23,148 zone. So but a nice good drop below this could lead to a further decline towards the this key area of support near the 22,705 zone, which is the lower bound of this range. So keep your eyes on this one. Gold, quick update on gold. Yesterday I talked about this, and this is what I was saying, that before gold was stuck in between these two lines, the short-term upside one taken from the low of the 12th of December and the short-term downside one taken from the high of the 7th of January, sorry. What I was saying, that given that it was closer to the downside line here, there is a good chance for this one to get broken, but still, for us to get comfortable with higher levels, a push above the 1593 zone, which is the high of the 2nd of February, or in other words, the current highest point of February, that's what we would be looking for in order to aim for higher levels. Because yes, on one hand, we did get a break of this downside line, but probably I would recommend to stay a little bit cautious and careful here. Near this area, because again, for the upside, for further upside, we need to see a push above this 1594 zone. In terms of the downside, we're going to be looking at lower levels if we get a break of this upside line, but in addition to that, we would like to see a drop below the 1561 territory, roughly around here, where we could then examine deeper extensions to the downside. Until then, we're not going to examine the downside unless it starts breaking this upside line. That's why, guys, for now we're more bullish than bearish, but just to get a little bit more comfortable with higher areas, a push above the 1594 zone would be required. Now then, US dollar against the Singapore dollar. Now I looked at this one for quite a well, actually last week, and basically what I was saying, that this is a nice gauge for the situation surrounding the coronavirus. Now you can see that at one point the US dollar against the Singapore dollar did try to correct a little bit lower. It did correct, but previously I was saying to keep an eye on this 23.6% retracement on the Fibonacci, but it didn't even reach that. It just reversed earlier and pushed back towards this high, maybe even actually created a higher level here. And for now, of course, we can get rid of this this Fibonacci because this kind of it doesn't look very good for the sellers, because in a way this could continue pushing higher, especially if it climbs above the recent high here. And let me just adjust this very quickly. If it climbs above this, the high of Friday, or in other words, the high of last week near the 1.3927, if it does push above this, then, well, I mean, the next target to consider is around the 1.3942, which is the highest point of 2019. So, guys, so something to keep an eye on. Very interesting developments here. You can see the steep uprise which we had here from the around mid of January, and of course this is understandable, because given that the coronavirus started picking up, I mean, this took a hit on the Singapore economy, because Singapore economy, it depends heavily on trade with China and Chinese tourism. So yep, guys, that's why the nice uprise here happened, and for whoever managed to capture this here, then yep, applause to you guys. But for now, in terms of trying to short this one, be very careful, because again, there is still some room for the upside, especially as I said, we do have this area near the highest point of 2019, around the 1.3942 zone. So this is our main target right now, but we'll examine that if we get a push above the high of last week near the 1.3927. I do understand it's not only a few pips here, but it's a very strong area of resistance here, so we'll keep an eye on that one. In terms of the downside, what you could look at here from the short-term perspective is if we get a drop below the yesterday's low near the 1.3877 zone, then yep, we may consider a bit of a decline here towards the 1.3844, but this is the area for us to get a little bit more comfortable with the further declines if it wants to drift lower, of course, and that's the break of the 1.3844 zone. That's when we could aim for a bit of a larger correction to the downside. AUDUSD. Now, I talked about this one recently, and basically I was telling you guys to keep a close eye on this pattern here. So in a way, some maybe could see this as a bit of a descending triangle, but to be honest, it's not a very beautiful one, and in general, it's not a really ideal one, I would say. So just mainly focus, guys, on the on this downside line taken from the high of the 1st of January, which continues to hold the rate down, and keep an eye on this key area of support near the lowest point of October. And we are getting close to this again. You can see that yesterday the pair slid, and it's aiming for this 0.6668 zone, which we are keeping a close eye on. A nice good drop below this could lead towards further declines. This would confirm a forthcoming lower low, and yep, we could start aiming for areas like, and let me just actually show you what I'm talking about. So I think for this one we need to go a little bit further down the line here, and probably we'll click on all, and this way we'll see what's happening. So basically you can see that where we are right now, we are not far from the lows of February, March here of 2009, guys. So this is a very important level here. Let's keep an eye on this one. A nice good drop below this could lead towards further declines, and we still have the lows here of October of 2008, the lows of November 2008. So good potential areas for support, but first let's see if we can actually break this area. Let me just get back into the chart. If we can break the 0.6668 zone and travel further south, so keep your eyes on this one. In terms of the upside, pretty straightforward. We need to see a push above this barrier here, the 0.6774, before we could examine higher levels. This way, the rate would be placed above its 200 EMA on the 4-hour chart, and more buyers could see this as a good opportunity to step in. Now then, NZDCAD, very quickly on this. So also at a very tricky spot right now. It's near its key area of support, or in other words, it's near the lowest point of February. So it didn't have a drop this morning, but quickly, the bulls quickly pushed back above this 0.8485 zone, and now the rate is balancing just slightly above it. So although yes, we can see that this area continues to hold, still we're a little bit skeptical about the upside, unless it starts pushing, at least starts pushing above this little barrier here near the 0.8543, and if we get a push above this, then yep, we'll aim for a little bit higher areas. Like initially we'll target this 200 EMA on the 4-hour chart, because as you can see, lately it acted as a good area of resistance, but of course if this continues to push higher and climbs above the 0.8607 zone, zone, then yes, we will aim for higher levels here, guys. So that's why be very careful in terms of the downside for now. In terms of the kind of near-term outlook for now, it's mainly to the downside, but just for that extra confirmation, we would like to see a drop below the 0.8485 zone, and ideally maybe even a close at least of a 4-hour candle below this, because we saw this morning already, like I said, a false breakout here. So that's why we would like to see maybe at least a 4-hour candle close, and then aim for lower areas. In terms of lower areas here, we can see that we do have some good potential resistance levels here. Resistance support levels, one of which is around the 0.8427, which previously, as you can see, acted as a good area of support back on the 14th of November and also on the 18th of November. So we'll aim for that one initially. GBPJPY. Now, yesterday I talked about this one, and basically I was telling you guys to keep a close eye on the 143.38 territory, which if gets broken, and if we see at least a 4-hour candle close above this, then yep, we could consider a move higher. But if this pair starts drifting lower and drops below the 142.74, of course this increases its chances of drifting a little bit further south. I mean, you can see that currently the rate is getting a hold up near the 200 EMA on the 4-hour chart, but if we see another slide where the 4-hour candle stays below this, then well, I mean, this is where you could start considering the 142.11 zone, or even going all the way here towards this key area of support between the 140.80 and the 141.14 zone. So keep your eyes on that one. EURCHF. This one is also on a decline. You can see that it continues to drift lower. Lately, it kind of continues to respect the 100 EMA here on the 4-hour chart. In a way, we could try to draw a downside line here, but to be honest, it's not really an ideal one. So we can draw something like this, but to be honest, like I said, don't focus on it too much. Mainly focus on some key support and resistance levels. So basically, given that for now it continues to drop lower, we will aim to the downside because it's also trading below this downside line, but we will continue aiming lower. As you can see, the price structure is of lower lows and lower highs, but we would like to see a drop below the 1.0606 level first before considering a further decline, because a drop below this would confirm a forthcoming lower low, and yep, we could aim for further declines, where one of our levels could be, and let me just go back into history here, one of the levels could be around here, not here, but there we go. So around here, guys, if I can capture this one, it's always a difficult one. So there we go, roughly around the 1.0532 zone, which is the low of the 29th of July, sorry, of 2015. So that's how far we've traveled. You can see that the pair is currently balancing just slightly below the this little area of support, which is the low of 2017, and yep, like I said, guys, for now everything's kind of still leaning more towards the downside, unless something happens and this reverses sharply and pushes above this downside line and pushes above this barrier right here near the high of yesterday, near the 1.0650 zone. So a nice good push above this could in a way open the path towards higher levels again, but still, even then, we'll be very careful, because this move higher could be part of a larger correction, because the overall trend is still to the downside. So we could draw a nice downside line from here, from the high of May, and yep, we could see this one just correcting, basically correcting higher until it could hit that downside line. But for now, guys, keep your eyes on some of these key areas of support and resistance. So mainly for now, keep your eyes on the 1.0606. Euro dollar finally for this session. Now, yesterday I talked about this one, and I was telling you guys to keep a close eye on the steep downside line, because as long as it remains intact, we may see further declines. Now, this level here, the 1.0826 zone, acted as a very good area of support. It continues to do so, and you can see that now the price is trying to, or should I say, the rate is trying to make its way higher, but it's still struggling with this downside line. We can see our oscillators here, the RSI and the MACD, are also trying to push to the upside. Both are pointing higher. Of course, all this is kind of creating this nice atmosphere for a potential buy, but the only thing is here is that we are still below this downside line, guys, and that's why be very careful with all this, and don't overreact yet, because as I've mentioned previously, for us to get excited about the upside, we will start considering higher levels if we get a push above the 1.0863 zone, but ideally we would prefer to see a push above the 1.0878 zone, which is the low of 2019, and only then target some upside. For now, we're very careful and cautious here, because in case this downside line holds again, we may see another round of selling, guys, where we could then target the 1.0777 if I'm not mistaken here. Yep, that's the 1.0777. That's our target for the downside. But again, as I said, be very careful for now. Yes, it is trying to show some signs here of potential recovery. It might travel higher, but again, as I said, for us to get a little bit more excited about higher levels, or at least with about some higher or larger recovery to the upside, a push above the initially above the 1.0863, and then a push above the 1.0878 zone would be needed. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, as always, 14:15 GMT, we'll have a look at some of these instruments and some new ones, and yep, we'll see how the market performs then. Keep your eyes on the economic calendar, guys. Today we do have some data coming out from UK, so employment figures, also a bit of information from Germany. We get the German ZEV economic sentiment for February. So yep, guys, a bit of interesting data coming out today, so keep your eyes on those. Anyway, thank you very much for sticking around, guys, and I'll see you later at my traders tea time, 14:15 GMT. Thank you very much, and bye bye.